Time for our hot picks section of the program. The Magnificent Seven haven't looked so magnificent to investors this year, but can we see some fresh interest in these high-flying technology stocks? Thiago Kapulskis joining us now from Itau-BBA with some perspective. Hey, thanks for being with us. Let's just jump right into all these different Mag 7 stocks that you've been watching closely to get a sense on whether some of them can find their groove again. I'm going to start with Nvidia because it's in focus today with the company unveiling its next generation of chips at their annual conference. They do this once a year, try to best themselves again, which is a reminder of how quick they move. But the market has been quick to move away from this stock. What do you feel about the Nvidia story at this point?
Yeah, so first of all, thanks a lot for having me here on the show again. Look, I think even before starting with Nvidia, just overall, the Mag 7 group has been under valuations that we don't see, for a long time. I think 3 or 4 years. We even published a note this morning for investors that IRRs are, like around 17, 18%. It's no different for Nvidia, right? So the stock has been sort of a range bound for 8 months or 9 months, right? At this $100 to $150. We think that the worst part of this short-term cycle is over. Basically, there's a very strong black hole ramp coming. Q4 results were very strong. Q1 pipeline also very strong for the company. The comparison basis on year over year gets better actually, for Nvidia. And plus, the company should unveil really interesting products today. We're really expecting a very strong keynote this morning, Pacific time, basically with new architectures like Rubin, very interesting for inference. At the same time, GB300 replacing the 200 product, which had its own problems, right, in terms of delays and everything. So we think it's a very interesting chance, to buy Nvidia close to 20 times earnings. So we would be buying this weakness on Nvidia.
Okay, buying the weakness on Nvidia, and you also like Microsoft in Meta. Very quickly, is there a common theme on why?
Yes, absolutely. So valuation is a theme, as I mentioned, right, for all these names. But I think for Microsoft more specifically, look, there has been a lot of noise in terms of the cloud growth. We think the company is doing the very right things in terms of allocating capital in a very good way. So we think that there's a very interesting asymmetry at the $380, $390, trading below the 5-year PE average. And, we're very confident on their execution. So as we usually say, the market rewards the patience and it requires patience, but we think it's a very interesting opportunity. And for Meta, really, they're executing really well in AI in all fronts, from recommendation model consolidation to getting more engagement to improving the workflows for advertisers. And it's no coincidence that the stock has been outperforming, and both in terms of earnings and in terms of the stock price reaction itself. So again, we also think it's an opportunity.
Okay, so Microsoft, Meta, Nvidia, these are all companies that you think create some opportunity for investors after the recent sell-off. Apple is a company that you feel differently about. How come?
Yes, great question. And we've been bearish Apple for quite a long time, actually. We've been on the show talking about that over the past few years. But we got a little bit more bearish over, I would say, the past 4 or 5 months. And it looks like we're going to see sort of a perfect storm for Apple results. The China numbers, China revenues were just out yesterday for January, with Apple losing share once again to the local players. So we think it's a very tough story in terms of their Chinese revenues or sales in China. There's the tariffs, in the Mag 7 group, Apple is the one that bears the most risk, with almost 50% of the iPhones or the products actually, assembled in China or with production in China. And at the same time, we have higher commodity prices, right? So NAND prices and DRAM prices, the memory component, which is very important for Apple, is going to be a drag on margin. So we think that the earnings for this year should have downward revisions, so we're kind of confident to say that Apple is once again a stock to avoid in this market. And again, if any investor needs to have a funding or anything, or a short or anything like that, we think Apple is an interesting short opportunity. Let's put it that way, in the group we cover.
Very interesting. Yeah, not a lot of people who call Apple a short, broadly